Now I'm not going to make you rest. Okay, I'm not going to make you rest. You'll be praising this video as I continuously drop other videos, not until all of you guys are profitable. I want you to be profitable in the market. That's when I can say that I'm not uploading any more videos. For those of you who don't know me, I'm James from Africa is trading. And guys, as you know me, those of you who have been following me for a long time, I'm a trader and also a YouTuber focusing on strategies that help traders with small capital to build their accounts and trade profitably. Okay, so if that's something you're interested in, make sure you give me that thumbs up. Okay, as we all know that it motivates me to drop more videos. Okay guys, in this video I'm gonna show you a strategy, the one strategy that you can use to trade all synthetic indices. I don't care the name of the pair, just trade it with this strategy. Okay, so guys, I want you to watch this video until the end and make sure that you don't skip, because guys, if you skip, you're not going to get it right. Okay, I want you to watch it step by step and slowly, don't rush it. Okay, if you're planning to skip any part of this video, then this video is not for you. Click away. Okay, if you're going to give it time and you're ready to learn how to trade profitably, then let's start. Okay guys, as you know me, I drop videos about liquidity because that's the only way how the market moves. Just ask yourself, how comes 95% of the traders lose money? Why? Because they don't follow the market, they follow textbooks, they follow what is taught on YouTube about trading. Okay, they have all that knowledge about trading, and one of the information that they have that I think is completely wrong. Okay, they give them that information, focus in that direction so that they can know exactly where they are and market makers will target them. Okay, now I want you to be against the 95. Okay, when you hear them saying a trend is your friend, just smile and abuse them. Okay, I'm joking, don't abuse them, but just laugh at them. Okay, so I'm gonna show you how I always go against all the textbooks, what they say about trading, and I catch moves like these ones. Okay, I go against each and every rubbish. Trading is the trend, nothing trend lines. Don't tell me smart money, don't tell me order block, don't tell me. I just go opposite and I make ton sheet of money. Okay, now in this one I'm gonna show you how I go against all what the textbooks say and I focus on opposite direction, and also look at liquidity because I know market will be moving to look for the liquidity. Okay, to look at what those traders who read the textbooks are doing and where they put their stop loss and sort them out. Okay, enough of the talking, let me go to the board and show you the strategy that I'm talking about. Okay guys, let us take it slowly. Since this was a buy, I'm going to give an example of a buy. Okay, I'll take an example of a buy. So guys, in the textbooks they tell you a trend is your friend. Be trading with the trend. Me, I'll tell you, don't do that. Okay, me, I'll tell you, do not do that. Me, I'll tell you, do not do that. Okay, so let me show you what you should be doing instead of that one. Okay, let me look for I'm looking for I'm looking for a notepad where I can write. I think I can use this one. Okay, Okay, wait. I think I can write here. Okay, guys, now in this example I took a buy on boom 600, so I am gonna show you how exactly I took that buy. So I said, in order for me to think of buying, I should see the market breaking down. Market should be in a downtrend, and me, I'll be looking for the buys to go against the 95%. So what I saw in this strategy, just showing this strategy before we go to the chart, I saw that the market pushed like this downwards, pulled back, and pushed again downwards, breaking the structure, and everyone was waiting for the retest of this resistance or order block here to drop. However, for me, when I see this, I just know market broke like this, came back up, but did not take out this high, and it dropped. That means it has created a liquidity here, because as it broke, people came and sold this retest. So I know there is liquidity here. For sure, I don't want to continue with this downward trend. Even if it breaks again and continue, I don't want to continue. I want target here. Okay, so what I do after seeing this, I go to the lower time frame and I confirm. Okay, I confirm whether this market is going to change the direction after sweeping this low on the lower time frame. Then I'll just target this. That's the same thing what I did. So with the confirmation, I may not show it clearly in this video. However, I will talk about it. I'll do a separate video about the entry confirmation in case you guys have requested for it. Okay, so after saying that, okay, sorry about that. Let me just clear this. So for the entry confirmation, okay, for the entry confirmation, I always, it depends on the setup, but I like looking at the left and see. Okay, I'm gonna give you the very one that I used to enter this trade. So as I saw the breakout like this, and I saw that there was liquidity here, market came and retested and dropped again on the left here. So like before this move happened, before this move coming down happened, market had already pushed from downwards. Okay, so you look at the left. So it in this movement which came up like this, it left out lows and highs, that the market came and swept. So it came and swept these zeros. So when I saw that there was a liquidity broke down here, I knew the market was coming to sweep these zeros and it will end on this liquidity block, and then it will go up to clear this liquidity. So guys, it is a bit confusing. However, you should follow it very well. You should also practice so that it doesn't confuse you. Okay, let me clear and show you that thing once more. So I said, as the market broke like this, came and retested this, I was looking at this liquidity. So as it was coming up, this is the lefty part, it came like this and it was leaving all these rows. All this was liquidity. Look at these rows, market was breaking and people were buying continuous. So I knew all these were going to be taken out. Okay, taken out before the market targets my liquidity. So it's up, the market can just sweep this, then go, sweep the row, then go, or it can sweep all these ones, or for that case it created a liquidity block. By liquidity block I mean market drops like this, drops, takes out a low, then goes and takes out a high. So this is a protected low, so it's a liquidity block. Should the market induce like this, push up, come and sweep the inducement, you're supposed to enter after that, put the stop loss here and target up. Okay, so this type of the entry of looking the left. So as the market dropped like this, as the market dropped, so as the market dropped like this, we add a liquidity block somewhere like this. So market had swept this, so I knew it was going to take out this inducement. So when it came to the zone, I dropped to the lower time frame. When it dropped that, I looked for the same thing on lower time frame such that I can enter. Okay, on lower time frame I looked for something like this in the zone. Assuming this is the zone, lower time frame, I also look for the same thing. I want the market to form a liquidity block like this. Come, sweep zero, moves up, induces, clears the inducement, I end, put the stop loss at this block, then target the liquidity up. Okay, so I'm gonna show you how I used just the exact technique to catch this move on. Boom. Okay, so about that, let me close something here. Okay, to catch this same move on boom, on boom 600. Okay, so let me go to 15 minutes and also let me change the chart. I was on boom 600. Okay, let me show okay, let me first turn on that because I can see some price action is not showing. Okay, this is the move. So okay, let me clear all the drawings so that we start from scratch. Okay, so I was somewhere here. First things first, I needed to see the break of the structure to the downside to confirm that people are looking for the sales, and for me I'll be looking for the buys. Now look at what happened here. Okay, I want you to look at what happened here. Okay, what happened here is very simple. Market made this impulse, pulled back, did not take out this high, broke the structure. Now everyone was thinking of continuation. Okay, so the breakout traders entered at the stop loss up here or here. Then the breakout and retest traders entered also at the stop loss. Okay, the smart money, every trader guys was going to be stopped out. Smart money, we're looking at this as the order block. They entered here, doesn't matter, they were all going to be stopped out. Now for me, as it breaks down like this and people are looking for sales to continue the trend, me I'm looking for the buys for sure. That is what was in my mind. So it came, we tested again, came back, and it held again the zone and dropped. That did not change me to start chasing the downside move. I knew it was going to come up and clear the liquidity, so I was patiently waiting. Let me show you. As this move dropped like this, I knew this move was just coming down to grab liquidity, then it continues up. So on the left, I had the liquidity because as you can see here, market was dropping. It cleared this low, that higher low. Okay, as you can see, cleared and moved up, and it left out these rows. Okay, so you know this was the inducement, and this row shall sweep this was going to be the liquidity block. So I knew when market comes into this zone, okay, into this area, I was going to look for the entry. Okay, however, when it came back, it did not give me the entry confirmation, so that showed me that market wanted to reach for more lows here, so it came for this. Because you can see also there was some liquidity block here. Okay, as you can see, market came like this, swept this low, moved up, left this. So I knew that was also another point of interest. And when the market came to this zone here, okay, I moved the lower time frame to 1 minute where I got the entry. Guys, be careful, because this part is tricky. If you're not careful, it's gonna fake you out and you're gonna lose money. Okay, look at how the market came into my zone. I want to play from this zone. This is the zone where I am powerful. Okay, this is the zone where I understand price action. If it's not in this zone, then I don't want. If it's not in this zone, I don't want. Market came, dropped, made low, swept the low, moved up. Very simple, guys. Can see how simple it is. Came, pushed down, again swept this low, pushed up. When it made this low, we confirm this as our liquidity block. Remember I said you enter after the inducement has been swept, so my entry was here, and my stop loss was clearly set below this. You guys can see, very easy. There's no need to complicate things. Also, I was patiently waiting. So guys, let me show you one thing about inducement. You see, as the market tries to pull back to our entry in this move, as it tried to pull back, it never reached and broke the structure. That's where traders get it wrong. They start chasing it. Remember, this move which is not clear inducement. In most cases, it's just more inducement to come and take you out. And as it was coming, it came like this, reacted, but I knew all this inducement had to go. Look at what happened when it came to my zone. It came to my zone like this. It pushed. I was not on the chart, but when I came to the chart, I saw that it had come again to the zone. I was ready to execute without worrying about anything. So I executed, put my stop loss down. Look at what happened. Market just continued to go up. So guys, that is it. I'm signing out. Make sure you backtest these concepts, because I'm very sure they are going to make you a profitable trader, mainly if you're a trader who is trading a smaller account. Okay, I remain James from Africa is Trading. As in case you didn't understand anywhere anything, be ready to comment. I'll get back to you. Okay.